This is Seewing, and before I'm going to go over the Redfin housing update for today, Thursday, May the 18th, I'm going to share with you the mortgage news daily and to go over today's 30-year fixed rate mortgage, which is went up to 6.82%, up 0.12 basis point. So this is concerning to say the least. So let me go over what transpired the last few months of mortgage rate. This is a Freddie Mac rate. By the way, this 6.82 rate is for people with excellent credit and people who have credit less than 720 FICO score or less than 680 FICO score, put them in the B category. They're going to even have a harder time qualifying to get a loan. They have to pay a higher interest rate or they need a higher down payment. Or again, a lot of people these days do not have good credit. So therefore, they are relegating into the rental pool and they have to stay on the sidelines until their credit gets better. So these kind of rates, the ongoing rate, as reported today here, 6.82, again, requires someone who have at least 720 FICO score, most likely higher. Because if you have not heard lately, the lending guidelines has become even more stricter than before, especially in my opinion, as a result of the banking crisis. There are several major banks has went under. So the mortgage market, the banking industry, and people who do the lending are really trying to go over their risk assessment. Consequently, their loan underwriting has decreased, have become harder. Especially, I know primary home loans like Fannie Mae lending guidelines is still a conventional, traditional, the best rates, the best guidelines. But when we talk about commercial loans and non-conforming loans or investor loans that are financed, those are 5+ type properties, those lending criteria have really become much harder. Commercial loans are a little bit different. They're not 30-year fixed rate mortgage. They have to reset within the 5 or 10 years from the time commercial lending occurred a few years back. So as a matter of fact, the commercial industry sector, commercial real estate sector is taking a hit. You can make the argument that the next few years, that could be, it's going to be it's a big crisis for the commercial lending. That's my personal opinion. Again, primary home buyers, you guys are pretty much fairly safe for those people that, especially with a good position to buy, you have a good credit score, good financial profile, good reserve requirement. If you can afford at today's median home price, if you can afford to having to deal with the 6.82 mortgage rate, then who's to say that you should not pursue investing, buying a house to live? But as for investors, that's what I do, real estate investors, that is my business model, by the way. It's never wrong time to buy because you're buying for cash flow. You let the tenant to pay your mortgage. So all you gotta do is buy a income property with 25% down payment and a very low price point, like 100K, 200,000. Then you should be okay. Investors, you should not worry about the mortgage rate that much because you will find a property that will cash flow properly as long as you will do your proper due diligence and buy in the affordable, low-level markets, something that I do as a business to assist our real estate investors to achieve those cash flow turnkey properties in the affordable entry-level markets with good rent to value ratio. So let's get back to the mortgage news daily. We have buyers and sellers. They begin to understand this is a new normal. And this past year, starting from January 23rd, the beginning of this year up until now, the mortgage rate has been hovering around the low 6. And in January, like 6.33, according to Freddie Mac. February the 2nd, it went all the way down to 5.99%. And people thinking, oh, the mortgage rate can be below 6%. Note that 5.99% was just a teaser. It went back up throughout February, went back all the way to 6.73% on March the 9th of this year. Then it came down throughout the month of March, and all the way back down again to 6.27% April 13th last month, and then went up April 27th, went up back to 6.43. And then the next 2 days went down a little bit, now at 6.82%, which is disappointing, right? And I do understand that. But so mortgage rates now at 2 months high, according to this article by Matthew Graham. Basically, on this short article, he said it's not going to be, the rates are not going to jump back and forth too high or too low. And it'll be very small changes and so forth. All right. Yep. Somewhat disappointing. 6.82 will price more people out of a home purchase, and it will disqualify more people. And then some. With that in mind, let's go ahead and go through the main article by Redfin, and let me go over the headline, which is Housing Market Update. Fewer metros are seeing home price declines as lack of inventory keeps prices up low. Fewer metros seeing price decline. Fewer metros that are tracked by Redfin seeing price declines. I could only surmise another way to interpret these words are that there are more areas, there are more metros either seeing price stabilization or even housing price gain. That's my takeaway, especially given the pent-up demand still, even at this mortgage rate, and then the extreme low supply of inventory across the board nationwide. Does it make sense? All right, let's get back to the article. All right, let's go through the first sentence. U.S. home prices were down 2.7%, the smallest decline in over a month, and prices are dropping in fewer metros. Notice the word fewer metros, so that's good. This prices are becoming stabilized. That's because there are so little inventory in the market, with homeowners handcuffed to their houses by low historical epic mortgage rates. Right? So again, to break it down, on a local level, home prices are declining in 28 of the 50 most populous U.S. markets, down from a high of 32 metros at the end of April. If 28 of the markets are tracked by Redfin, level home prices are declining in 28 of the 50 most populous metros. That means 22. That means almost 50% of the metros that are tracked by Redfin are not declining in value. But then, of course, Redfin does not go over in deep dive about what are those 28 metros, which is not declining. Some of those 48 metros are perhaps are increasing in home appreciation, but it's not. I know for a fact because I promote investment homes in new markets over the years to my investors. I know for a fact the markets that are not declining are in the Midwest and in the South and Southeast and many of the areas. But again, major news media does not cover boring markets that are going steady in price appreciation, even during the boom and bust pandemic marketplace. You have to understand negative news sales, clickbait videos sales, anything that are not sensationalized or not being reported, and bad news sales. That's how it is. All the clickbait YouTube crash bros, they all about clickbaits that has distorted and misinformed a lot of people. It's very unethical reporting. But at the same time, YouTube channels are, in my opinion, it's the Wild West of education. I call it what it is, and I'll stick to my guns. Anyway, furthermore, pending home sales are down 13% from year earlier, but that's much smaller than the 24% decline in new listings. So pending sales are down 15%, new listings are down 24%, and the trend of downward trend continues. It ultimately will make things worse in terms of supply of inventory. So the depth of new listings has drained inventory, with the total number of homes for sale dropping over the past 2 months, going against typical seasonal trends. As many know on a historical basis, every year for the long time. The spring season normally home prices normally they have a lot of inventory. People want to buy new homes before the summer starts and all that. Normally, we see pending sales creep up, active listening creep up on a historical basis. Is based on seasonality, based on spring buying season. But this year, it has bucked the trend, completely counterintuitive, completely countercyclical than past spring buying season. Consequently, pending sales keep falling, active listings keep falling, new listings keep falling because homeowners are locked in. If you think right now it's coming to a back to historical low inventory, you haven't seen anything yet, especially when the mortgage rate stays at mid 6% or even slightly higher. Home sellers will continue to sit tight on their homes with a lower mortgage rate, and they're not going to sell until the mortgage rates go below 6%, which I will cover that momentarily because Redfin talked about that further down on this article. He also said, Redfin said, a lot of homeowners have acclimated to raising the 6% range. This means all the skyrocketing or mortgage rate last year from 3, 4, 5% early last year to 6 to 7% the second half of the year. People had been sitting on the sidelines. Now they're used to it. A lot of buyers right now, they are used to the 6.5% range and they are pulling the trigger for those people that can afford to buy right now. They are conditioned, they're acclimated, they're conditioned, they're programmed. Hey, this is the new normal, so we have to go with it. We're not going to sell out anymore. We need to buy a house. Those people that can qualify at least with a medium price range, qualify with a mid 6% mortgage rate, they don't care. They want to buy a house. That is their number one goal. And then those individuals, those buyers, they have this mentality, hopefully, buy and hold, keep their house 5, 7, 10 years until things change. Everything you hear right now, all the trends and negative news is, trust me, is temporary. Okay, nothing is permanent. So things will change and the future will look better. So it's a matter of people have the wherewithal to buy at the earliest time possible so they can benefit from equity growth and good mortgage housing reductions, tax reductions, that is. All right, the rest of the article is that newly built homes could help to alleviate the inventory shortage, even if the rates remain elevated. And there are signs that more may be coming. U.S. homebuilder confidence rose for a fifth straight month in May, hitting the house level nearly a year, and permits for single-family homes rose to a season-month high in April. Now, I take this with a cautionary tale. Just because the home building industry have higher confidence, it doesn't mean all of a sudden they have a whole bunch of new homes for sale, which will offset the number of existing homes that are not for sale. It doesn't flip. The home construction doesn't flip overnight just because their confidence level has dramatically increased. Still, it takes time because the home building industry are still suffering with labor shortages, construction worker shortages, and ongoing supply chain disruptions. And also, it takes time from permitting the house to build the foundation, to get the authority to build the homes and all those things. It takes time. And I do not believe, from a short-term perspective, the new construction of homes can dramatically offset the lack of existing resale homes a buyer can buy. So it just doesn't happen overnight. So therefore, this trend of low supply of inventory will continue to challenge the marketplace. And the pent-up demand is still pretty strong these days. We're not, even though we are at a 40-year home affordability crisis, and many potential buyers are sitting on the sidelines. Many of them are first-time home buyers that have very minimal down payment. there are FHA buyers or VA buyers. Those first-time home buyers have the biggest challenge, and because especially when home prices are going up right now, when we're seeing multiple offers and bidding wars in many markets, especially the lower end medium home markets, when home prices keep going up and the mortgage rate are still elevated, so more and more prospective first-time home buyers will be continue to sit on the sidelines, and they have to enter the rental pool, if you will. Yep, that's how it is. That's the reality of what's going on. As we can see, economics 101, demand is outpacing supply. Economic 101, did you not learn this in sixth grade? If demand outpaces supply, which is current environment clearly is, then there's a scarcity. When there's a scarcity, then it will put upward pressure on home prices. This means home prices will go up because demand exceeds limited supply. Economics 101. Let's get back to school, people. All right, here's some of the example. One of the Redfin agent, one market says, I'm practically begging potential sellers to list, especially those in a more affordable price point, because those are the home buyers are hungry for. Every listing I've had since January, priced at under 400,000, has had multiple offers within a few days on the market. That's what's going on. If a home is priced well and it is in great shape, the seller will get multiple offers. Understand? That is how it goes. All right, let me go over some highlights. Right now, the monthly mortgage payment on a medium asking price hit a record high of $22,573 at 6.39%. Now, this article was done a few days ago, but today, according to the mortgage rate, was 6.81%. So therefore, this record high of the medium monthly mortgage on a medium asking price of $2,570 will be higher still, somewhere in the 2,600 or something mark. All right, so that'll price even more people out of the purchase market. Pending home sales are down by almost 16%. This will cause a lot of problem moving forward for the rest of this year, even though this kind of information, the western region of the U.S. continue to have even more new listing decline. It declines the most, as a matter of fact. The western region of the U.S. have the most decreases in home prices. At the same time, they have much less new listings than the other regions of the U.S. That's quite troubling. Monthly supply is 2.7 months, which is almost a historical inventory shortage all over again. Almost half of the homes that went in the contract can accept the offer within 2 weeks. See how quick, right? And 33% of homes sold at above their final list price. So let's go over the graph and we should conclude this video. Median sales price was only down by 2.7% year over year. However, we have seen home prices increase ever since February. From February until May, we have seen 5, 6, 7% appreciation because of pent-up demand and low supply. So the new medium price is $371K. So, however, the last few years, as you can see the gap right here, home prices have increased double, triple, quadruple in prices, depending on the specific market in the country. Medium asking price, pretty much similar this year than the past 2 years. Similar trend, which is interesting. And housing mortgage payments, as I stated earlier, have increased another 10%. And so this means less buyers can qualify to get a mortgage, and more people are unable to qualify to get a home. They will be relegated back to the rental pool. Okay? Pending sale is down 50% year over year. As you can see, the gap between this year and the last 2 years. And new listings down a whopping 24%. If this trend continues for the rest of this year, we can see extremely even lower than 2.7% supply of inventory available. Active listings up a mere 2%, but is on a downward trend. So active listings supposed to go upward based on a typical spring season, but not this particular spring. Again, extremely low supply of inventory is as a saving grace for the market. All right, so homes sold within 31 days, which is a pretty decent benchmark. 1/3 of homes are sold above final list price. Price shops has been stabilized from before, so more sellers for pricing the homes much more realistically than the latter part of last year. All right, so I think that much conclude my presentation. So my takeaway is, even though the mortgage rate peaked higher, we are still have a pent-up demand because the inventory is so low, but many buyers are chasing the entry-level homes, and entry-level homes that are below the median price in a particular market, and the homes that are selling or priced very well, and they are rehabbed quite nicely. They sell very quickly to the tune of multiple offers, 3 to 5, 10 offers per house, depending on the specific market. And the final bid price is probably 5 to 10% above list price on those entry-level homes. So homes are selling like a hotcake. People are still very motivated to buy for those who can afford it. And so only time will tell. So this is a very challenging market. And that's pretty much it. That's my takeaway. So if you see a lot of value on this video, please smash the like button and subscribe to my channel if you have not already done so. I want to reach out to more buyers, and I do not have enough subscribers. So please talk to your friends and colleagues that my channel is available. Not only I talk about the weekly urgent housing market changes, I also talk about real estate investing for those of you out there who are already a real estate mom and pop investor, or for those of you who are newbies out there that want to flip the switch, if you will, and if you're in a position to have the money to buy an investment property, please quickly visit my website below and drop your email into the form to subscribe. And once you become a free member of my organization, you will receive weekly turnkey real estate investor newsletters. And once you join our network, you will receive a weekly free information about all aspects of turnkey real estate investing. Regardless of where you live in the country, you have the ability to buy out-of-state turnkey cash flow properties in the hottest markets throughout the country, regardless of where you live. So we help you to invest in profitable cash flowing properties, which is what we do best. So without further ado, thank you for attending. I'll see you next time. Thank you so much. This is Seewing. Good day. Bye-bye.